Hey everyone, this is Finding Value. Hope you're having a great day. I'm going to talk about asymmetric bets and a little bit about my investing style and what asymmetric bets are, what some look like in the past, and what some of these look like in the future. So I'm going to jump right into it. You're going to lose me. Here we roll. So asymmetric bets. First, I'm going to go over the type of investor I am, and then I'm going to go over some other things for investing. So I'm a long-term investment type person. I don't do day trading, swing trading, or options trading. You'll see the market updates that I post videos on. That's just for entry points. It's not for a suggestion to sell or buy or anything like that. They're just saying this is what the current market is doing and this is what my opinion is on the short-term movements. What I do is I identify value. I quote finding value. That's what the name of this channel is. And then once I find that value and I know it's cheap, I go long. I use charting to confirm a good entry point that aligns with fundamental analysis or analysis on a commodity or whatever that analysis is. So what we look at is I look at the conditions and I look at the value. And it's like, how do you identify those two things? So I identify investment conditions, interest rates, inflation, cycles, anything with the environment that your investment is in. We have low interest rates right now, which could potentially increase in the future. We've got kind of a deflationary battle right now, which I think will end up in inflation. And then we're in a couple of different cycles. And you need to watch my other videos about what cycles we're in and why we're in those cycles. I use ratios to tell us relative value. So it tells us what's cheap and expensive relative to other things when you price it in a ratio. It takes away the dollar value and how inflation is put into certain assets differently, and how those assets could be expensive relative to history against other assets. So I'm focusing in on the value assets, the ones that provide exceptional value and can provide us asymmetric bets. I also look at the imbalances. Supply-demand imbalances provide opportunities. If we know that there's a market that is going to become a huge imbalance in the future because of new products coming into market or whatever it may be, if we see very large projected deficits in the future, it provides very good bets that we can put into investments. And sometimes the conditions, the ratio, and the imbalances all get aligned and we get massive bull markets. Right now, I see a whole bunch that are aligning with conditions, with ratios, and with imbalances. That is why I started this channel, is to show and experience, to show and let everybody know and have them experience what it's like to catch a market bottom and ride it all the way to a top of a very massive bull market. So, what are asymmetric bets? An asymmetric bet, trade, or investment is when the potential upside of a position is much greater than its potential downside. I've got two scenarios here. If you risk $1,000 for the chance of making $10,000, you can make an asymmetrical bet. If you risk $1,000 for the chance of making $1,000, you're making a symmetrical bet. So you want to go after the asymmetrical bets where you're putting up cash and you can earn many multiples, many multiples sometimes in returns versus how much you put up for risk. And another thing is, risk is not necessarily tied to reward. What we're trying to do is de-risk our investments. And what that means is we're going to look in the investment world and say, what are the cheapest things? What conditions are they investing under? And where can we put our money where we have limited downside risk and a whole bunch of upside potential? And what I'm seeing now is commodities provide a lot of asymmetric bets if you understand the conditions and price movements. And we're coming up in the next either now to, we'll call it 2-3 years from now, there's going to be a whole bunch of asymmetrical bets that are coming in front of us. And we can catch the bottoms or pretty close to the bottom of most of these investments and ride them up many, many multiples. So I'm going to show you two very recent examples of asymmetric bets. So this is what palladium looks like. This is an actual. But we knew even back before this what the projections were of palladium, and they were getting pretty large deficits in the future projections before even, you know, the 2012 timeframe. Because I invested in palladium in the mid-2000s. And I saw this coming. And it was like, man, this is going to be big. So this is the growing shortage. This is the deficits here. Million ounce deficits and all these deficits in here. This is a small surplus. So what does this look like in a price chart? So keep in mind that the deficits really started hitting in 2012. Well, here we are. 2012, that's when they started hitting. And the price didn't move yet. There probably was some inventory. So I was buying in the mid-2000s. So I was buying here, like in this area. And I was just holding on. Eventually, those supply deficits hit. Inventory was drawn down and price moved. This was an asymmetric bet. I was buying in this region down here, the 250, 300, 400 range. And now it's up over 2,000. It's actually, I think it's 2,300 right now. This came down and came back up. Another one, we were looking at rhodium market balance here. This was published in 2018. You can see the surplus deficit as it kind of cycles back and forth. When you look at the ratio charts, and I do a lot of ratio investing to tell relative value, I'll put a link in this video in the comments or the description field of what ratio investing is. But ratio investing told us that rhodium was extremely cheap in this 2015, 2016 timeframe, right here. It was $650 an ounce on average all of 2016. And we can see that the projected deficits is just massive. We've got a lot of hybrid vehicles coming online that are going to up the loadings of rhodium. And rhodium is a very small market. It's only 1 million production per year. And they're projecting 300,000 in a shortfall of only 1 million ounces produced. And it's a byproduct metal. So I don't know, it's not like it's not like they're just mining rhodium. They're mining a whole bunch of other things, and rhodium's a byproduct of other mining. So what does that look like in prices? Well, 2016 was that bottom. If you can tell right here, 2016, 2017, right in here, that's when you want to be purchasing. And there it is. It's actually up at 14,000 right now. And I would be holding on. So those are two bets that I showed you where you could see the supply-demand imbalance, and then you could see the price movement, which justifies our ratio investing style, which shows value, and justifies that when you look at the supply-demand imbalances, that it does work, and that it's delayed. And obviously, if you're buying in 2016, 2017, you're going to have to be patient enough to hold it the 4, 5, 6 years, depending on where you bought it, to realize this gain. So looking forward, and what this channel is about, is finding future asymmetric bets. We're looking for bets that we can place our money and that have very high potential for returns, many multiples. The ones that I see today are platinum. Silver was just in it, and it's starting to come out. Uranium, and that's going to be in the future. Oil and natural gas are both going to be an amazing investment once they come out of their bottoms. Copper, zinc, cobalt, nickel, and lithium. These are a lot of the electric vehicles and we'll call it the alternative energies group metals. There's obviously a lot more than this. I just put some of the major ones on here that I'm seeing today, very high level. There's a bunch of rare earth metals, I'm sure, and a whole bunch of other things that are asymmetric bets. And if you have any asymmetric bets that you see out there, please put them in the comment. Let me know what they are, and I can share that with everybody. This is a community that this channel set up. I'll be the facilitator of it, and we can share our investment ideas and bounce them off each other. And here is what I look at charting wise. So here's Fidelity Select Natural Gas. I just chose this. It's a mutual fund and it's easy to chart. But you can tell we're still in a downtrend and we haven't broken this downtrend yet. It very much, could break its downtrend, but not yet. So this is a future asymmetric bet in my opinion, if we can buy it down here for extremely cheap. I will probably be buying individual stocks. I don't buy a ton of mutual funds or ETFs, but I do chart ETFs and mutual funds to see where they're at. This is Fidelity Select Energy Services. Again, there's going to be an exceptional opportunity down here where we can buy this probably sub $10 or very close to $10 with an upside potential over 100. And I think it's going to be much larger than 100 in the future. I think oil could potentially go to $500, $600, $700 in a 8 to 10 year time span. Here's platinum, and I wanted to show platinum. History, what I would do is I'd chart this out, and obviously this was bouncing around. I would be a buyer all through these next year or two in here. This is the upside potential, right? So you're getting at $300 or so, 3 something, and your upside potential was actually it spiked over like 2,000 something. We are setting up a similar pattern. These are called flag patterns. We are coming towards the tip of the flag pattern. Keep in mind that gold's already broken up to the outside or to the upside. Silver's broken to the upside. I have a feeling that platinum's going to do the same thing. It's going to break to the upside. Our ratio investing, again, I put it in the description below. It tells us that platinum is cheap against all the other metals. Rhodium's through the roof. Palladium's very expensive. Gold's very expensive. Silver's pretty cheap, and platinum is dirt cheap. So I've been purchasing platinum along this bottom here, and eventually we're going to break out of this chart pattern. The chart definitely, if it breaks above like 1,000, 1,050, we are in an uptrend. We are going to be moving after that. Right now, it's just consolidating in here, waiting to go. So, what does this all mean? It means that we have exceptional opportunities in front of us. Over the next couple of years, we should be looking at commodities. I do go into ratios in my other videos if you're interested in looking at the S&P 500 in relationship to commodities, the S&P 500 in relationship to gold with relationship to energy, all that stuff. And you can see what the cheapest commodities are out there right now. And I can show you that value. Some of them may not be great entry points at this second, but over the next 3 months, 4 months, 5 months, 6 months, or a couple of years, we can accumulate these assets at rock bottom prices. And what this is going to allow us to do, and for you to experience, is you're going to catch a bottom, you're going to cost average in at a bottom, and you're going to ride this whole thing, all these commodities up to the top. It is exceptionally rare that these opportunities present themselves in an investor's career. You don't get too many of them. And that's why I started this channel, is to make sure that everybody can get a piece of this commodities bull market that's coming up. Some of them are very close to already starting, like gold's already started, silver just started. I think platinum is right in front of us, 6 months to a year or less. I don't know the exact timing, but I just know it's cheap. Energy's right in front of us. We got to get in energy. There's incredible opportunities in energy. 50 times your money, 100 times your money. It's possible. Uranium's another one. Uranium, there was some potential investments that went up 100,000%. Yeah, 100,000%. Most of them went up between 50 times and 1,000 times. So I'll get the names in front of you. I'll get the opportunities in front of you. I'll get the value in front of you. It's you get to determine what you want to buy and what you want to participate in. But I'll get you the names and I'll get you the value in front of you. If this seems like something you're interested in, subscribe to the channel, leave comments, let me know what you need to know. I created this channel for everyone that's viewing. I didn't create it for myself. I already know this stuff. Thanks for listening. This is Finding Value. Hope you have a good day.